Welcome to the Capital News. I'm your host, Alex Cowardice. Today is Sunday, August 4th, 2019. In this segment of the week ahead for August 5th, 2019, we have a handful of things we want to get into. First, over the weekend, the United States suffered a couple mass shootings, one in El Paso, Texas, one in Dayton, Ohio. These are senseless and needless tragedies. The causes of this will be discussed politically, especially given the fact that we are in the midst of the 2020 presidential campaign. So we will hear gun control, gun violence, mental disease, mental illness, disenfranchisement, racism, white nationalism. A whole bunch of things will be thrown around. They already have been. This will be front and center once again. What's the answer? What's the cure? It's really anybody's guess, but the difficult thing is we live in a world where people do suffer from mental illness. We do live in a world where people are just flat out on the warpath for whatever reason. They want to do harm to themselves. They want to do harm to others. How can we prevent this? It is a very difficult question. It's very difficult. You want to say you want to ban all guns. We're not for that approach, not at all. Very much supporters of the Second Amendment, the right to defend oneself. You know, it is a difficult question because you have people that are dying, and this could happen anywhere. It does happen anywhere. It happens at schools. It can happen in hospitals, happens in shopping malls, happens at nightclubs. Walking down the street, it can happen to anyone. Is that the cost of freedom? It's a serious question. We have the right to defend ourselves. We're likely to have this debate. Once again, it will continue because unfortunately these types of events will happen again. We will hear from the Democrats. A lot of them will want to, again, confiscate weapons, look to possibly repeal the Second Amendment for those who are really out there at the extreme. Republicans might take it the step further and do all the bidding for the NRA. Of course, that's how the argument is framed. We have to have a national conversation. We have to understand what's going on at the heart of this. We have to get to the motive of this. And again, some people are just flat out crazy. Some people just want to see chaos. Some people just want to do harm to others. How can we identify these people? It's very difficult to do so. Very difficult. So the best thing that we can honestly do, and it's not the best solution perhaps, but maybe it is we have to hope and we have to pray for these families, for these victims, and for everybody, because those of us, and there are many people out there suffering from depression or mental illness, disenfranchisement, a whole host of things that can contribute to this. We live in a world we have a violent culture in the United States of America. We're at war. We've been at war for going on nearly 2 decades. Our television sets, our movie theaters are filled with violence. We are saber-rattling with Iran, staging coups against Venezuela. We are, unfortunately, a rather violent culture. It's not just here in the United States, it's around the world. So this is a tragedy. Innocent lives were lost. People have lost their sons, their daughters, their brothers, their sisters. And the best we can do right now is pray for them and hope and pray that this doesn't happen again. Unfortunately, it most likely will. So we'll keep you up to date on this. If we can find a motive as to one of the shooters, I believe El Paso, he was captured, he gave up, although the shooter in Dayton, Ohio, was killed. So we'll keep you abreast on any updates there if a motive can be ascertained. Around the world, we do have the Asian markets open. We have some breaking news that came out of Bloomberg not too long ago. China, out of Beijing, they are asking state companies to halt the purchase of U.S. agricultural products. So, ladies and gentlemen, it appears that the trade truce is most definitely over. This was understood to be the case last week when Thunder Thumb's President of the United States, Donald Trump, said we are increasing tariffs. We're going to place a 10% tariff on $300 billion worth of additional Chinese goods that can make their way into the United States. Now, we said last week, we were talking, will China wait until these tariffs go into effect to see if they actually do go into effect on September 1st? Or will they retaliate beforehand? Well, it appears that they are retaliating beforehand. Again, Beijing is asking, which basically means telling, directing state-owned businesses, companies within China to halt their purchases of U.S. agricultural products. They have already been reducing their purchases. This is basically going to take it to zero. According to the trade truce that was agreed to, or semi-agreed to, I guess you can say now, following the G20 summit in Osaka, Japan at the end of June, didn't even last a month. Didn't even truly last a month, but we were told that China had promised President Trump that China will purchase more agricultural products. That did not happen. Donald Trump was saying afterwards, look, we're not in any hurry to make a deal. I really don't care if we make a deal or we don't make a deal. I'm fine with Plan B, which is taking in tariffs, which he says is billions and billions of dollars that the Chinese are paying the United States, simply writing a check to the U.S. Treasury. This is not true. It does not stop the president. It does not stop his advisor, Peter Navarro, and others from making this claim, but that's what they're doing. And now we have, again, further escalation. So we go from we're in no hurry to we're going to slap tariffs on the Chinese because President Xi is taking too long. We're in a hurry. We're in no hurry. No hurry, in a hurry. Make up your mind. We're shooting from the hip. Is there a strategy, or is the chaos part of the strategy? But again, this goes to the credibility of the president. Because if he says one thing, does another, or if he says one thing, and then the Chinese come out and say another, who will the markets believe? But right now, it appears that the markets are going to believe both sides because both sides are escalating. There is no longer a trade truce. There is an escalation in the trade war. Another thing we have is the Chinese yuan is above 7 to the U.S. dollar. This will most definitely have a lot of backlash coming from the White House, I can imagine, early Monday morning. This will be considered currency manipulation, devaluation on the part of China to sort of defend their economy from the increase in tariffs. This will be par for the course. We will most likely hear from Larry Kudlow. We will most likely hear from Peter Navarro, perhaps Secretary of the Treasury Steven Mnuchin, and probably President Donald Trump himself. Again, if not formally out in front of the press or giving a statement on Twitter. Again, we will likely hear currency manipulation by the People's Bank of China, allowing the yuan to lessen to 7 to the U.S. dollar. It has not been at this level for over a decade. Now, we also have further protests taking place in Hong Kong as we speak. The leader of Hong Kong has come out and given a press conference saying that the protesters are bringing or could bring Hong Kong to the brink. They are basically on strike. Transportation is slowing down. There's a lot of people in Hong Kong, as you can imagine. This is also an economy, in our opinion, our analysis, that is way overvalued, way overheated, and is due for a significant correction. We talk about this all the time. We have overvalued real estate in Hong Kong, in Australia, throughout China, Canada, and in parts of the United States as well. We will do more podcasts and videos on this in the near future because these are major points of interest that can signify turning points and can also signify where some of the structural issues exist within economies around the world. So we'll keep you monitored on those protests, but they are continuing nevertheless. A few other economic variables that we want to talk about here, because the economic calendar is filled this week as well with a lot of PMI numbers, that's Purchasing Manager Index numbers, from the manufacturing side and for services as well. And we already have some of those coming out for the Asian markets. We have Hong Kong private sector PMI at its lowest in over a decade. The seasonally adjusted Nikkei Hong Kong PMI dropped to 43.8 in July, the lowest since March of 2009, from 47.9 in the previous month, amid ongoing U.S.-China trade dispute. Now, of course, anytime you're going to read an article or read some of this news here, they're going to throw that in there amidst the ongoing U.S.-China trade dispute. Of course, we know that this is mainly smoke and mirrors, okay? Is this an issue? It most definitely is, but this is more a mask of the underlying fundamental economic variables that are deteriorating the world over. We are at the end of a business cycle. This is what happens. You can't sprinkle fairy dust on it and fly away like Tinkerbell. That's not how it works. It doesn't matter who's in the White House, as much as everybody wants to believe otherwise. It doesn't matter if you're a Democrat or Republican. It doesn't matter who you voted for. The economy is bigger and greater than any one individual, as it should be. This is the business cycle doing its thing, folks. It's doing its thing. It is slowing down the world over. And this is why we have so many economic variables that are slowing down and rolling over, which is proving this fact. And that's okay. Recessions are okay. We don't need to panic. Despite the fact that this one's probably going to be pretty nasty when it hits, this is ultimately better for the system. However, we have a fraudulent system that needs to be wiped out. But I digress. We've had that conversation, and we will continue to have it at other times. But again, Hong Kong private sector PMI is at its lowest in over a decade, going back to 2009. And of course, 2009 was not a pretty picture. Japan services PMI revised lower. Excuse my pronunciation on this. The Jibun Bank Japan Services PMI was revised lower to 51.8 in July from a preliminary figure of 52.3 and compared to a final 51.9. And remember, folks, 50 is our neutral number. If you are above 50, you are talking expansion. If you are below 50, you are in contraction. We have Singapore private sector growth accelerates. So that's good for the Singaporean people. We have the IHS Market Singapore PMI rose to 51 in July from a 4-month low of 50.6. We have some news from China. We have the Chinese composite PMI rising to 50.9 in July. The land down under, Australia service activity falls the most in 4.5 years. The AIG Australian Performance of Services Index plunged 8.3 points from the previous month to 43.9, pointing to the steepest month of contraction in the service sector. So, mixed bag, but mostly to the downside, especially if you're talking about Hong Kong, Japan, China, Australia. Singapore, well, it's great that those people might be actually recovering slightly. Again, this is month to month. You have to look at the greater trend, but nevertheless, we have deterioration in the Asian markets. No surprise to us here. We also have some news coming out from Pakistan saying that the dispute between Pakistan and India over the Kashmir region could escalate. Now, we talked about this probably a couple weeks ago when the Pakistani leader was at the White House, of course, visiting with President Donald Trump. And Donald Trump made the statement that when he was at the G20, he spoke with the Prime Minister of India and was asked by the Indian Prime Minister to be a broker or a mediator between Pakistan and India over the Kashmir region. This, of course, caught the attention of the Indian government, and they denied this emphatically. They said the Prime Minister of India never said this to Donald Trump. So again, folks, the credibility of the president is quite important because somebody's lying here. It's either Donald Trump or it's the Prime Minister of India in the government of India. Which is it? Because this isn't small talk here. This isn't some small country here. These are huge countries with huge populations. And both of them have nuclear weapons. So this is not small talk. This is some serious stuff here. So we'll keep you posted on that. What else do we have? What else do I want to look at here today? Because we do have the Asian markets trading right now. And let's see if we can find what's taken place with some of these markets, because it's quite interesting as we make our way through the Asian markets. Now, right now, we have the Japanese markets down 545 points as I'm doing this podcast, representing a decline of 2.5%. So the sell-off from last week is continuing. Again, of course, this is intraday. Anything could change, but right now, the Nikkei, the Japanese markets, are down 545 points, down 2.5%. The Chinese markets are also down 0.5%, continuing their decline from last week. The kicker, and the thing that we want to pay a lot of attention to, at least in my opinion, is the South Korean market. And we said last week they were at levels where we were seeing them at the beginning of 2019, the end of 2018, which was, of course, not a good time for global equities. We said we have to watch this level because it appears to have some sort of support from a technical standpoint. And again, that was around the 2,000 point level on the South Korean market. We are now well below that, declining 2.4% as I'm doing this podcast, a decline of 48 points. We're now sitting or trading at 1,950 points. We will see how the stock market closes because that's what we are concerned with, not necessarily the intraday movement, but where the South Korean market actually closes for Monday. And of course, that is taking place right now as I'm doing this podcast. I believe this to be a forward-looking indicator because I akin this to the Dow theory, the Dow Jones Transports, which we talk about on a daily basis, because South Korea is a major exporter, and it should have a good pulse as to the rhythm of the global economy. We also have the escalation between that trade war between the Japanese and the South Koreans, so that is also aggravating the situation. The Hong Kong markets right now are down 785 points, representing a decline of 2.9%. This, of course, on the back of the trade escalations between the South Koreans and the Japanese, the United States and China, and also on their domestic front with the protests. So this is just a continuation of last week's sell-off. Will it continue is the question, because we also have markets in Australia down 1%, and in New Zealand down 0.8%. In both of those markets, the Australian market and the New Zealand markets, have been making all-time highs as well. We also have a lot of bonds, 10-year bonds, making all-time lows. So I think the global economy, the bond market, if you want to view them as, again, the adults in the room relative to the equity frat boy traders on Wall Street and other stock market indices around the world, the bond market appears to be signaling that the economy is slowing down. Wow, folks, what a surprise. Who didn't know that? Well, it is. And they are anticipating that central banks the world over will continue with an easing cycle, which they are most likely going to. Most likely. East to west, north to south, it makes no difference. Developed country, developing country, emerging markets, everybody is cutting interest rates. Everybody is priming the pump. So we'll get back to that, too, because I want to talk about the Chinese yuan and the People's Bank of China devaluing their currency, which is what they're doing. Make no mistake about it, that's what they're doing. Some commodities I want to take a look at, too, while I have you on the phone. We have crude oil down 1%, so trading at $55 a barrel. We'll see what happens there throughout the day. The other interesting note here is natural gas, which continues its decline. And again, folks, this is true of corporations all over the world in the oil and gas industry, but particularly here in the United States, they are just saddled with debt. Junk bond status, some of them have triple B rating status. They get downgraded from triple B to junk. You're going to have pension plans, mutual funds, by their very charters that have to sell these bonds. This can start a cascading effect. This will cause a liquidity problem like we haven't seen in quite a while. Will this be the catalyst? Will this simply be another domino that sets off a whole bunch of other dominoes down the line? So we have to pay attention to these commodities. We have a lot of people out there saying, well, we're not going to hit a recession because one thing that people look at is the price of oil. And they say, well, the price of oil has to really be up there. $80, $100. This is nonsense. And the reason why I'm calling nonsense on this is because of the amount of debt that exists within the system. They are living on a prayer. They are living on the hopes that central banks can continue to prime the pump and allow them to operate as zombie companies, which is terrible for a well-functioning system. Doesn't matter if you're in the United States or anywhere else. We do not want nor need zombie companies, but that's exactly what we have going on here. And if we continue to prime the press, if we continue to lower interest rates, they are going to continue to be operating. And that's not what we want. That's basically throwing good money after bad. Really, it's throwing a whole bunch of funny money after bad, which makes it even worse. We have gold right now hitting a 6-year high, $1,451 an ounce, up nearly 1%. Silver is trading up nearly 2% at $16.54 an ounce at the time of this podcast. One of the other main things that I want to focus on right now, too, is copper, because copper is hitting a 25-month low. Remember, ladies and gentlemen, we pay attention to this on a near-daily basis because we look at Dr. Copper as a leading indicator, and it has been selling off quite significantly over the past couple of days. This, again, is at a 25-month low, so this is well surpassing the lows of which we hit at the end of 2008, 2009. So if this trend should continue, how will it bode for other financial markets, primarily stock markets, the stock indices? We'll find out soon enough. A couple other things I want to talk about here is, again, the Chinese yuan above 7 to the US dollar. So the Chinese are devaluing their currency. Basically, the People's Bank of China is saying, look, you want to increase tariffs, we're willing to devalue our currency, which is a complete, pretty much slap in the face to the Trump administration, because the Trump administration has been calling out China, not officially as a currency manipulator, but saying that they devalue their currency, and that's what they do to protect their economy, and that is how China is, quote unquote, paying the price of these tariffs. Now, I can more or less agree with that they are maybe suffering from a loss of demand for some of their products, or that they're devaluing their currency to offset it. I can get that, but China isn't sending a check to Uncle Sam. And that's basically what Donald Trump and company are telling us, which is just simply not true. Now, what the Chinese are saying in this move, too, is that they feel confident that they can defend the yuan and that this is in a good trading range. Now, in order to defend these currencies, I don't want to get too technical here because I'd have to go into another presentation of it, which I might have to do at some point. But China has a good amount of foreign exchange reserves. That is to say, they can defend the yuan up to a point. Now, if things really get hairy, what the Chinese can do is they can sell their U.S. treasuries, get U.S. dollars, sell their U.S. dollars if that's what they have to do in order to defend their currency, to keep it within a certain range. What will they do? Remains to be seen, but I've always told you that the Chinese are going to feel confident in their ability to manage their economy no matter what happens with this trade war. And this, to me, is a signal that they feel confident that they can control their currency, that they can tell their state companies halt U.S. agricultural product purchases and the like. I don't believe the Chinese are going to be able to manage everything perfectly, not even close. I think their economy is slowing down. Forget the U.S.-China trade war. They were going down. The problem is, and what I think the President of the United States seems to not understand, or maybe perhaps doesn't even care, is the interconnectedness of these markets. If China goes down, the United States will go down with it. We are not an island unto ourselves. We are greatly interconnected. Because if China goes, Europe goes. Europe's already going. They don't need help from anybody else. These are the world's largest economies, folks. The United States, the European Union, and China. They go, that's it. Now, it's fine with me. Personally, it's fine with me from the standpoint of ridding all of the malinvestment. It's going to be bumpy, and it's going to hurt a lot of people. I don't take any pleasure in saying that, but, we've done this to ourselves, and simply printing money is not going to solve the problem. If it's that simple, then just tell the Federal Reserve or order the Federal Reserve and other central banks around the world, just print it and give it to everybody. Let's make everybody a millionaire. Better yet, let's make everybody a billionaire. If it was that simple, then what is the hesitation? It's because it doesn't work. That's why. So we are likely going to see more finger pointing from the White House, again at China, but also here at home, continuing to blame Chairman Powell of the Federal Reserve and other members of the Federal Reserve for, while they cut interest rates, they didn't cut them enough. They didn't cut them enough, and they'll say, well, look, They increased interest rates for the past year and a half. They did quantitative tightening. 25 basis points isn't enough. Ending quantitative tightening isn't enough. While we appreciate it, it wasn't enough. You waited too long. Now we're in the midst of this trade war again. It's escalating. It's all finger pointing. The White House will take all of the credit for the stock market going up, for some good headline economic figures. But if things go down, it's going to be somebody else's fault. And again, that's poor leadership. But that's what this White House is going to do. I don't have any problem with them blaming the Federal Reserve. We say to end the Federal Reserve all the time, end the Fed and abolish the federal income tax. However, that's not what the president's saying. The president is saying that the Federal Reserve should lower interest rates and even embark on another round of quantitative easing. That's the disease, folks. That's the drug that the addicts on Wall Street want. They want their hit. They want their fix. That's the problem. And now you have the President of the United States and some of his lackeys calling for more of the problem. Here at the Capital News, I cannot stand for that. So I am an outspoken critic on those calls. Lastly, to wrap this podcast up, please check out thecapitalnews.com or our YouTube channel, The Capital News, because I did post another video dealing with U.S. unemployment and asking the question, has U.S. unemployment, has it bottomed out? Graphically speaking, that is to say, has the U.S. reached peak employment? Or has the low figure of 3.6% that we hit in April and May, is that it? And is that indicative of an oncoming recession? And is there enough evidence, enough data within the unemployment figures, looking back many decades? Is there enough data to sort of use it for predictive purposes to sort of get a range of dates as to when we may actually be in the midst of a recession? And that is to say that this expansion that we are in, that is the longest in U.S. history since we've been keeping records, will it reach its peak? And once you reach your peak, where do you go from there? Down. So it's an interesting presentation. Please take the time to watch it. I hope you enjoy it. Again, you can find that on thecapitalnews.com or our YouTube channel, The Capital News. Please be sure to like, share, subscribe. We do appreciate it. It truly helps the channel grow. And this channel is growing slowly but surely, thanks to all of you, and I truly appreciate you. Hope you had an enjoyable weekend, and we will catch you here tomorrow. We covered a lot in a short period of time because there is a lot to talk about. It's always exciting. Stay diversified, stay vigilant, and stay with the Capital News. This is Alex Cowardice. Godspeed.